Good evening, everyone. Thank you for tuning in this beautiful Friday evening. It's already a weekend. Thank God it's a Friday. So today is 29th of August, 2025, and it's 8:30 p.m. Malaysia time. Okay. Today's topic is about the September 2025 forecast on global trends. Okay, using both Chinese astrology and trend research. The Chinese astrology will be done by me, and the trend research is done by BC. Okay, for us to focus on economy, financial, geopolitical event to help you to make better decision, because we know that most of the market sentiments, most of the commodity prices are driven by the global trends. Okay, so the theme for today is month of retreat. Okay, we shall see what it means by month of retreat later on the forecast of the Chinese astrology. Okay, so the talk agenda today, as usual, we will start with the introduction, which I've already done. Later on, I'll go through a disclaimer and then a brief recap of last month's forecast, and then the influence of the five element energies in September 2025 using both the four pillars, uh, 八字 and also I Ching. Okay, and then BC will go through the global trends based on his research for the main economy of the world, okay, like US, China, Europe, okay, for September 2025, what do we expect? Okay, and then we will summarize our talk. Okay, so let's go through the disclaimer. Okay, the content that we display here is purely based on our studies on global trends in relation to five elements in Chinese astrology and the research that's done by PC, which means that we use two layers, two methods to forecast on global trends. And I think from, this is already 39 episode. Now we have done 39 episode of this. So we have enough statistic to say that we are at least, 90% aligned. Okay, I think 90 over percent aligned. BC, we can say that now that
Yeah.
both the research and the Chinese astrology trend. Okay, so this is already proven that Chinese astrology five elements energy is very powerful to forecast on global trends. And it's for you to use as a guideline in your investment decision. So we, as usual, would like to caution, you know, everyone to, in the investment, when you make investment in such volatile situation, do your own research on the company that you want to invest. Okay. Um, there will not be any stock advice given. We are not financial um, advisor. Okay. So additional support for members only. We have global trends and astrology and global trends members um, will be available through email. Okay. Or in the members Telegram group. Okay. So those who wants more information to consider join us as a membership is actually not expensive for the value that you are paying and then for the potential gains you can get. Okay. So we analyzes regional economies, as I said, that US, Europe, and China, and there will be definitely inherent differences from the regional perspectives, and based on the observations and our studies on the current economy trend. And we do not put in any absolute or definitive judgments about any specific regions. Okay, it's based on what we study and then we put it here. Okay, and we share it here. Okay, so a little bit about us if you are new to us. So both PC and I actually we collaborated in year 2022, I think. Is
Yep.
yeah,
2022.
yeah, in 2022. Wow, time flies. Okay, so we collaborated that time to come up with this platform called Astrology and Global Trends, where we decided to use both methodology to forecast on the global trends. Okay, so our forecast is actually aligned to the planetary energy field, because five elements, those Chinese astrology is also based on the planet's movement. Okay, so that's why we can achieve about 80% of accuracy in helping our members to make profitable investment decision. Okay, so we have authored this book called Unlock Your Wealth Potential, which talk about period 9. Okay, the first 5 years, and what we have no we have written and we have forecasted has already come true. I think most of it. Okay, so it's until year 2028 from 2024. So I think those who follows the book, follows the advice we are given during the book talk, um, you would have definitely, reap some rewards. Okay. Like we talk about, actually a lot of people ask us, when we go for our book launch talk, what is the best thing to invest? We just give advice 2 years ago that invest in gold. That's all. Of course, there are many other things that we have already, shared with our members, which are the things that they should look at. So we have written 3 annual forecast book, and most of it also is 80% accuracy. Okay, using both methods. This is written by both me and PC. So we are in 2025. I predicted that this year is going to be, a very chaotic year, which is very true, even worse than, the previous year. Okay, and then the coming soon will be the 2026 Firehorse Year Astrology and Global Trend Forecast. Okay, yeah. This book will be launched in end of September or maybe early October, because we need some time to really look at the trends, and then before we can, put in our thoughts, that um, our research, that we need some time to do the research. And these books are not written by AI. These are all before AI times. 2021, 2023. We wrote it in 2022. Okay. So in fact, all these books um we only ask AI to do editing. In the past, I used Grammarly to help me. Okay, so right now the only thing, yes, we use AI, but it's only editing. Okay.
In a world where market trends are as mysterious as the stars, investors seek clarity beyond the chaos. Meet Evelyn Tan, a Chinese astrologist, and her co-founder, Wong, an investment guru, where ancient wisdom meets modern market trend research. Experience investment forecasting refined by Chinese astrology. Join top investors who trust their precise insights for their most crucial decisions. Ready to transform your investments? Join now for exclusive insights and forecasts brought to you by Astrology and Global Trends.
Because we find that there's still a lot of blind spots when you ask AI to write a book. There will be a lot of hallucinations. So let's recap on, month of August 2025 energy, what we have forecasted, and what is happening that's it correlate to what we have forecasted. Okay, in terms of the five element energies, I forecasted, there will be a destruction and a reset globally. Okay, the weather is dry, heavy, and also typhoons going on. And then, expect increase in international tensions and natural disasters. Okay, and cash flow problem, movement of metal prices, and also there's a push for renewal, and investors, they are also lack of clarity, and the society is have uncertainty. So you can see that in August we still have a lot of conflicts or resets, that is the tension that is unresolved. Okay. And these are all the headlines you can check. Okay. And then the heat waves, and we even have typhoons. Okay, that is going on, that we look at. And I think I talk about earthquake. Okay, that we, even in Malaysia, in Johor, I think last week they feel the tremors in several states, especially the south states there. Okay. And yeah, the lava erupting, and then the financial crisis that we see here. Okay. yeah, China's Country Garden. Actually, China Country Garden, I think the service one is one of the index share in Hang Seng. I think they have been chosen in 2022. This is the mother company. That one is more for servicing. Okay. Yeah. And then there is also a metal price movement that, as we predicted, that we see the movement of price in gold and silver. Okay. And the economy, that is, I think that the society, that is a reform, a number of renewal that is going on as well. Okay. So these are all the headlines that is going on last month, which also correlate to our studies, our forecasts. Okay. So in the month of September 2025 energy, this is a very interesting month. We have, great changes, because first of all, actually, the month itself, the pillar is countering each other, the wood and the metal. Okay. And also the day pillar and the month pillar also, they are countering each other. Okay. So chances that there are, man-made disasters coming in, and then um, there will be, um, there will, yeah, as I said, because this is actually a knife of cutting the wood. Um, so there will be like a man-made sort of um precise act of destruction. So potentially there will be intense elemental warfare. The only thing that luckily is all yin pillar. So people have been attacked by wood, so there will be a lot of unrest and conflict going on, and then severe global tensions that the old world is slowly dying. Okay, yeah. So and also abrupt changes in the weather pattern. There could potentially be windstorm, drop in temperature, because we are already in the autumn months, and heightened systemic activities and tectonic pressure around the East Asia Pacific Rim, the um, the earthquake risk area due to unstable earth. And then we also need to look at precious metal. There's attention to the precious metal. So when I say attention, that doesn't mean the price will go up. Okay. Okay. So yeah, when I say this is a month of retreat, let's look at the hexagram here. The next hexagram for this month is actually hexagram number 33, which is a retreat. So it's actually heaven over mountain. That means the sky. You can see this is a qian gua here, and then this is a keng gua. This is a mountain. Okay, so it's like a strategic withdrawal. So because um when the mountain meets the heaven, the force is very big, so it's time to retreat. So it's a withdrawal consolidation time. Potentially that it also shows a retreat. I think in the Ukraine war there's signs of that, right? BC, from the
Yeah.
last few days. Yeah. Okay. Trump is going in together with Putin and also Zelensky for the negotiation as well. Okay. So there's pause of negotiation and strong possibility there are military de-escalation also in the conflict zones. Okay. So these are the months September 2025 energy. Okay. So we can look at what actually happened in from PC side, from his global trend research as well. Over to you, PC.
If you find this video informative, please give it a thumbs up and consider subscribing to my channel for more valuable insights and updates. By subscribing, you will be the first to know when I post new content.
Let's recap month of August. Where US is concerned, we warned that Trump's threat to tariff Brazil and India could, for their import of Russian oil, could result in higher oil price, but this did not happen as both countries ignored Trump's threat and continue to import Russian oil. So Trump tried to play the tough card, but then India just ignored Trump, and Brazil right now is making plans to retaliate against the US. And it's a bit preposterous because Brazil actually have a deficit trade with the US, which means US actually have a surplus when they trade with Brazil. But by actually tariffing Brazil right now, Brazil is going to shift its import from the US to elsewhere. So sometimes I think Trump doesn't have a very strong pool of advisors, and they are more often than not work towards a propagandized agenda and not necessary to the benefit of the American people. So in Europe, the US and EU finally reached a trade deal. Under the deal, the US will levy a 15% tariff on goods imported from the EU. The deal will need to be signed off by all 27 members of the EU. Overall, the EU is seen to have given up more than the US, potentially shaving as much as 0.5% of the former GDP. That means that Europe GDP is expected to fall if the EU signs their seal of approval for this trade deal. Whereas we forecast that the EU would actually play a much tougher, would actually have a much tougher stand, but unfortunately, the EU caved in under Trump's threat of tariffs. So in China, we say that China inflation will be within a tight range, but the inflation actually broke out of its tight range, rising 0.4% year on year in July. So, but where we got right, we predicted that the passing of the Big Beautiful Bill Act would result in an increase in spending by the government, and the infusions of M2 money supply will see the stock market surging. And true enough, the government's budget deficit reached 291 billion in July. Month to date, as of 25th August, the S&P have risen 2% from 6,339 points to 6,467 points. I think right now it's much higher because the S&P reached a historic high, I think yesterday, if I'm not wrong. So we said that Trump will continue to pressure the Fed, and Powell finally relented at Jackson Hole, commenting that the Fed is ready to adjust its policy with a possible cut beginning in September. As predicted, inflation remains sticky. CPI rose 2.7% year on year in July, while core CPI rose 3.1% year on year. We also predicted that gold will rise, and month to date, as of 27th August. Sorry, this one will be much later. Just need to delete this. So we expected delinquencies to rise, and this is how they fed. So credit to Charlie Bilello, who actually put out this chart on X.com. So you can see that the most worrying is credit card debt, which is 12.27% delinquent, and student loan, which is 10.16% delinquent. And this is where they fare during the global financial crisis. You can see that student loan has already surpassed debt during the global financial crisis, whereas credit card debt is inching towards the similar level. So we also highlighted that US Treasury yields will remain high, while US dollar will likely fall. As of 25th August, the yield for 10-year and 30-year US Treasuries remain elevated at 2.471% and 4.89% respectively. And month to date, the DXY has fallen to 0.06%. So we also predicted that gold and silver could rise. Month to date, as of 27 August, gold has risen from 3,344 $3,490 per ounce to $3,429.30 for a gain of 2.52%. But we all know that the futures right now, gold is trading closer to $3,470 per ounce. So month to date, silver has risen from $36.66 to $38.38 for a gain of 4.69%. But again, silver right now is hovering around $39 per ounce. And as predicted, turmoil is spreading across the US. So here, Trump administration is reviewing all 55 million foreigners with US visa for any violations so that he can deport them. So I think the ICE is doing racial profiling, and a lot of the deportation right now actually are people from South America, Central America, and from Asia, and even Africa, and Middle East as well. So following LA and DC, Trump wants to send the National Guard to other US cities. So right now, Trump is targeting states controlled by the Democrats, or cities where Democrats are holding the post of mayor, to actually get the National Guard into those cities to maintain his control over the cities. Now, this has some very significant constitution problem, and I expect that there will be a lot of discontentment with this policy, because the National Guard, when they patrol the cities, they were actually fully armed. And I've seen photos of the National Guard patrolling the streets fully armed, and this could actually trigger something bad if, let's say, either party loses control. So in Europe, the Euro area GDP rose 1.4% year on year, lower than the Q1 GDP at 1.5%. Inflation remained elevated at 2%. We highlighted that inflation will negate the impact of monetary easing by the ECB. So you can see that even though the ECB have a lot of, is now back to monetary easing, having low interest rates, but then the GDP, in Q2 did not grow more than the GDP in Q1. So UK Q2 GDP rose 1.2%, lower than the Q1 GDP at 1.3%. Inflation rose 3.8%, again negating the impact of monetary easing by the BOE. We mentioned that more citizens across Europe will rally in support for Palestine, and this is a headline from AA.com on 10th of August. So we also highlighted anti-immigrant crisis in Europe, and here are some of the headlines of attacks in Ireland, in UK, and in Poland, and then in Europe, in a lot of cities across Europe. So China, we predicted that China's major economic indicators continue to register growth, albeit a slowdown in retail sales growth. We mentioned that the Chinese government will step in amid the price war among major tech titans. So here is how the Chinese government pressured the tech titans to end price war and in food delivery. So we also mentioned that China will ensure the continuation of trade-in programs. So right now, China allocate more funds in October to support the trade-in program. So there is a so-called lag period, okay, especially in Q3, and therefore Q3 retail sales will be somewhat lagging, because a lot of the programs would have already come to an end and they need to reboot the program again, and that's why the Chinese government will allocate more funds in October. So we predicted that China will open up more opportunities for foreign companies in the financial sector. So right now, China is doing a major trial in that it has designated Hainan FTP as a free trade port, okay, to launch cross-border asset management pilot program. So this will open up opportunities for foreign companies. So the pilot implementation of cross-border asset management in the Hainan FTP serves as a critical testing ground for not only the opening up of China's financial sector, but also the nation's overall opening up. So a lot of the Chinese government policy would be to do a trial run in a specific controlled environment and see how it progresses. Then it will be, if let's say everything meets the objective without a lot of hiccups, if there are hiccups, they will fine tune it, then they will bring the whole model to other cities. So this is a gradual pace of opening up. So we highlighted that China will continue to pursue its objective to expand internationalization of the RMB in international trade and expand its global footprint. So China accelerates globalization of yuan amidst doubts over US dollar stability, published by IDN. And Hong Kong government is accelerating the development of the financial center as a gold trading hub. And not too long ago, the SGE opened its first gold walk outside of mainland China. In fact, the SGE has already opened one in Saudi Arabia, and more will actually be coming. So if we look at the US economic indicators, CPI rose 0.2% month-on-month in July. Year-on-year, it grew 2.7%, unchanged from June. So core CPI rose 0.3% month-on-month in July. Year-on-year, it rose 3.1%, up from 2.9% in June. PPI rose 0.9% month-on-month in July. Year-on-year, it gained 3.3%, up from 2.3% in June. So PPI is more reflective of the inflation since it is based on the actual price of inputs, whereas the CPI is clouded by more than 30% of guesswork. I think last month, if I'm not wrong, or in the members area, in the weekly report, I've actually shown how the CPI is calculated by the BLS, whereas in the past, more than 90% is based on actual data, and less than 10% is based on guesswork. Right now, when the tariffs have been implemented in Q2, as of Q2, it is 60% based on actual data and 30% based on guesswork. So this is how inflation is being manipulated lower so that the Trump administration doesn't get the hit. Okay, so this goes to show that the reliability of the data, especially on inflation coming up from the BLS, is questionable. So retail sales rose 0.5% month-on-month in July. Year-on-year, it gained 3.9%, down from 4.4% in June. Net retail sales less CPI was 1.2%. Industrial production fell 0.1% month-on-month in July. Year-on-year, it rose 1.4%, up from 0.8% in June. Durable goods orders plunged 2.8% month-on-month in July. Year-on-year, it rose 3.5%. So despite some of the bad data overall in some parts of the economy, is still showing some signs of growth. So the NAHB index came in at 32 in August, up from 33 in July, but remains in contraction. So NAHB index is actually the home builders index, and it actually shows the confidence of home builders with regard to the real estate sector. And in contraction means that they are not optimistic of the future, in the near future, and that is why you see the price of lumber falling off a cliff. So housing starts jumped 5.2% month-on-month in July, while housing permits fell 2.8% month-on-month. New home sales fell 0.6% in July. Year-on-year, it fell 8.2%. Existing home sales rose 2% month-on-month in July, unchanged year-on-year. So this is also one of the reasons why the home builders are very negative, because new home sales year-on-year fell 8.2%. So there is not much anticipation of building up the inventories. More or less, they are settled with inventories because housing right now has become unaffordable for many people, because the price of houses has actually grew much faster than the growth of earnings for the workers. So preliminary PMI for manufacturing in August came in at 53.3, while preliminary PMI for services came in at 55.4, indicating there is some expansion in the US economy. The Conference Board Lending Economy Index, or LEI, for the US inched down 0.1% in July, after declining 0.3% in June. The LEI fell by 2.7% over the 6 months between January and July, versus a 1% contraction over the previous 6 months from July 2024 to January 2025. So you can see that after some positive indication, right now is coming down again. And what is concerning is that during previous cycles, it often shows that it goes down, then eventually move up, and then it fell again. Similarly here as well, before it goes into a recession. So these are something that we need to pay attention to. So Powell speech. So we just go through some of the summary. So Powell cited job risk and opened the door to a September rate cut, mentioned that there are rising risks to employment. He said that base case, the impact on inflation from tariffs will be short-lived. He also said that base case, in order to balance risk, may warrant a policy adjustment. So this is my conclusion. The Fed can no longer contain inflation at 2%, hence the need to make a policy adjustment. It goes to show that, that 2% which is plucked out of thin air is no longer feasible. If we look at the current trend of inflation, and also effective from August, a lot of the tariffs would have come into effect. So the rising risk to employment are forcing the Fed to abandon its inflation target in order to ensure stable employment. Now, between inflation and employment, the Fed will always look at employment, because inflation is something that they always believe they have a tool to control, okay, like what the Bank of Japan is doing, whereas like what they have been doing over the last 30 years, controlling the yield of the Japanese government bonds, so that by launching QE after QE to press the yield of the Japanese government bond down. But right now, everything is bursting at the seams, and the BOJ can no longer control inflation nor the rise in the yield of its bonds. And the Japanese 30-year bond just reached a new historic high. So the Fed will also embark on the same journey. If, let's say, in order to fight inflation, in order to ensure that employment remains stable, because if unemployment is rising amid high inflation, then what we could see will be a lot of turmoil in the political environment, where people may launch strike, people may demonstrate in the streets and so forth. So employment is more important to the Fed than inflation. But if the Fed tries to control inflation, then that would only push the value of the dollar further down. So the impact from tariffs will not be short-lived, as Powell suggested, and the CPI will demonstrate this unless the BLS manipulates the CPI. Because right now, the impact of tariffs is sieving through the whole system, the whole economic layers, and eventually it will hit the consumer's heart. So should the Fed reverse its policy and start to cut, the resultant impact from inflation will be disastrous for the US economy. It will be stagflation on steroids. So that is why I believe before it happens, we could likely see QE coming in. So let's look at the US debt situation. Okay, the US budget deficit rose 291 billion in July, raising the surplus in June. If you recall, I mentioned that the June surplus is just a flash in the pan, simply because they have reached a debt ceiling and there's no more new debt which they could raise to encourage the government to spend. And this is the second highest budget deficit on record if we look at the rate bar on the chart. So since the signing of the Big and Beautiful Bill on July 4th, the US has racked up an incredible 780 billion of additional debt. So if we look at it, that is slightly more than just this was about 2 weeks ago, if I'm not wrong, the data. So that's about 4 to 5 weeks, the US have racked up 780 billion. So probably in 8 weeks, they will rack up 1 trillion. Now, do not forget that the Big and Beautiful Bill will only raise the debt ceiling by 5 trillion. And if the US can rack up a debt of 1 trillion in 8 weeks, that means in 40 weeks, the US will have reached another new debt, which means less than a year from now. Okay, 1 year have 52 weeks. So by right, the Big and Beautiful Bill will actually last, if I'm not wrong, 3 years. So that means the US will rack up more debt, and before long, probably after closer to the end of next year, they will actually reach another debt ceiling. And the US government debt to date stands at 37.3 trillion. And likelihood at the kind of pace that we are going, that the US is racking up debt, we could probably be closer to 40 trillion by the end of this year. So if we look at the outlays and receipts, total receipts stands at 338 billion. Total outlays is 630 billion. At 92 billion net interest per month, the US government total net interest per month per year will be 1.08 trillion. So already you can imagine that 5 trillion, 20% of it will go towards the interest payment. And tariffs only accounted for 28 billion. And we have, on CNBC or the news media, you have people from the Trump admin like Lutnick mentioning that, the tariffs itself would we can earn so much from the tariff that we can actually help offset the debt, which is actually none of it is true. And therefore, tariffs will not help offset US debt. And surprisingly, since the Fed is not on QE, the US Treasury Department decided that they should do QE by themselves. Okay, so imagine this. US Treasury Department is borrowing from the debt market to buy back its own debt. Okay, that is truly very silly. Okay, it's like you take additional debt from your credit card to offset the debt of another credit card. So here they bought 2 billion on 31st July, and they bought 4 billion on 19 August, and then they bought 1.4 billion 26 August. So all in, over the past few weeks, they have collectively bought 7.4 billion. And that's not all. The US Treasury bought 10 billion of US Treasuries in June. Okay, the highest over here. So will August be another crowning achievement? Well, let's see. So if you look at the chart, you can see that the US Treasury has been conducted stealth QE to support the bond market to bring down the yield. Because if the yield goes up, then the cost of borrowing for the US government would go up as well. And that's why they try to bring down the yield by buying US Treasury, creating a false demand for US Treasury to push the yield down. So this is another attempt of yield curve control. So what could happen to the US in September? By the discrepancy between CPI and PPI, the person heading the BLS is EJ Anthony, who will support the Trump admin policies. Therefore, inflation will be managed to justify a rate cut. A rate cut will see the stock market rise along with commodities and US Treasuries, but will tank the US dollar. So, need to add this here. Okay. So, however, we may see a repeat where US Treasury yields soar after the rate cut due to the question of US unsustainable debt spiral, which is why we may see yield curve control being implemented. So if you recall last year, Powell actually cut rates by 100 basis points, but the US Treasury saw the yield drop before before the next few weeks, and then we see that the US Treasury yields started to rise because everyone started to question the sustainability of the US debt. So similar thing could happen again. And therefore, we could see the US Treasury Department buying more US debt at the Fed's reverse repo drops. So we can also expect US national debt to increase substantially with yet another budget deficit in August. The US is ramping up its war machine to replenish Israel's weapons and now on the verge of entering into a military conflict with Venezuela. Trump will also send cruise missiles to Ukraine at the EU's expense. And we need to understand that war is an expensive affair and could blow a hole in the US budget. Thus, we could see some changes in US policies, and this is why I think, in a certain way, Evelyn predicted a retreat. Yes, we see a retreat from the Fed policy from hawkish to dovish, and where Trump is concerned for being anti-war to being pro-war. So in Europe, Euro area CPI came in at 2% year-on-year in July, unchanged from June. UK CPI came in at 3.8% year-on-year in July, up from 3.6% in June. Euro area retail sales rose 3.1% year-on-year in June, up from 1.9% in May, which was revised up. US retail sales came in at 2.5% year-on-year in July, up from 1.7% in June. Now, German manufacturing PMI came in at 49.9 in August versus 49.1 in July, while services PMI came in at 50.1 versus 50.6 a month ago. France manufacturing PMI came in at 49.9 in August versus 48.2 in July, while services PMI came in at 49.7 versus 48.5 a month ago. UK manufacturing PMI came in at 47.3 in August versus 48 in July, while services PMI came in at 53.6 versus 51.8 a month ago. But despite some of the PMI showing expansion in certain areas, we are much further away from the actual fact, from what is highlighted in the PMI. And according to Germany's Chancellor Merz, the country economy is facing a structural crisis. And you can see that German industrial production has been in negative territory over the last 12 months. And here he stated that the German welfare state can no longer be financed. But Germany is not the only country facing fiscal distress. Here, it was reported that France may need a bailout from the IMF. And here in the UK, there is also a report that Britain is heading towards an IMF bailout. So what's the main reason? Because years of supporting continual war in Ukraine and subsidizing immigrants have bled the countries dry. You can see that because of the woke political policy, okay, of subsidizing immigrants, whereas the funds could be used to subsidize their own citizens. It's used to subsidize immigrants. It has bled the country's finances, and therefore you can see that all three countries right now is facing financial distress as the cost of borrowing increases. Here, the German 10-year bond yield, you can see that it has been rising, as with France and UK. So higher yield reflects higher cost of borrowing due to underlying distress in the country's economy and financial environment. So what could we see in Europe in the month of September? So what is happening in Germany, France, and UK will reverberate across Europe. And the latest casualty could be Spain, because Spain is seeing its yields rising as well. Low economic output, persistent inflation, and eventually mass layoff. Internally, all three are facing political turmoil. Europe will remain in a stagflationary spiral. Calls for IMF build-up for France and UK is just wishful thinking. So you can see that how silly it is. Yeah, the biggest contributors according to the size of contributions are the US, Japan, China, Germany, France, and the UK. So all six, except China, are facing either economic or financial distress. I just mentioned that the US is facing an unsustainable debt spiral. Japan is just seeing its bond market imploding. Okay, Germany is suffering from fiscal distress, France and UK as well. So how are the funds coming in? Okay, from the IMF. So that's why I think sometimes when journalists write this kind of reports, and when the economic minister said this kind of make this kind of announcement, they forgot who is actually subsidizing the IMF. And for sure, China will do nothing without exacting a price from the countries, because you can see that the EU is still on a trade tension with China. So I think China will not bail out, countries from the UK, France, or Germany. Perhaps maybe they will help Germany a little, because there's a lot of German business interests in China. But France, I think they will be less inclined to help, and the UK definitely not at all. Okay, so the euro and Great Britain pound could weaken against the USD. So ECB and BOE will need to work harder, and in the absence of an IMF bailout, QE will return. So if we go to China, CPI rose 0.4% year-on-year in July, up from negative 0.1% in June. Core CPI rose 0.8% year-on-year in July, up from 0.7% in June. PPI came in at negative 3.6% in July, unchanged from June. Retail sales climbed 3.7% year-on-year in July, down from 4.8% in June. Retail sales in the first 7 months rose 4.8%. Industrial output rose 5.7% year-on-year in July, down from 6.8% in June. So fixed asset investment rose 1.6% year-on-year in the first 7 months, and investment in infrastructure construction went up 3.2% year-on-year, while manufacturing investment increased 6.2%. Meanwhile, investment in property development fell 12%. Survey urban unemployment rate on average stood at 5.2% in July, up from 5% in June. So if you look at the statistics, definitely I think July doesn't look too good where China is concerned, but we'll talk more about it later. So China total goods exports and imports in renminbi terms rose 25.7 trillion in the first 7 months, up 3.5% year-on-year. Growth rate accelerated from an increase of 2.6% registered in the first half of the year. In July, total goods trade rose 6.7% year-on-year to hit a new monthly record of 3.91 trillion, with the growth pace also quickening from 5.2% in June. Exports jumped 8%, while imports climbed 4.8% to mark the second consecutive month of growth. China trade surplus in July was 98.2 billion, an increase of 15.2% year-on-year. Year-to-date, China trade surplus reached 683.5 billion, an increase of 32%. And very likely, China trade surplus would actually exceed 1 trillion by the end of the year. So, July review. July Fed Powell when compared to June. July is the start of Q3. A poor start in Q3 will likely force the Chinese government to recalibrate its economic policy. So here we already have the Chinese government is reportedly considering asking SOEs or state-owned enterprise to purchase completed but unsold apartments from developers to convert them into affordable housing. So you can see that the SOE sometimes have to meet its social obligations, and therefore sometimes investing in SOEs, you will see that their profit level doesn't grow as fast as private enterprises because they still have to fulfill their social obligations. So the real estate market has been weak for far too long, affecting the broader consumption of household items and affecting heavy industries like steel, cement, and building materials. The government also unveiled plans to offer interest subsidies for qualifying personal consumption loans and eligible business loans in the services sector. With a loan interest subsidy ratio of 1%, every 1 renminbi of interest subsidy funds is likely to drive 100 renminbi of loan funds to be used for residents' consumption or the supply of services in the consumer sector. So previously, the trade-in program is very focus on consumer goods. Right now, they are moving to services instead of goods. So the decline of prices of commercial residential homes in China, 70 large and medium-sized cities continue to narrow on a year-on-year basis in July. In the four first-tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen, new home prices dropped 1.1% year-on-year in July, with the pace of decline narrowing by 0.3 ppt from June. Second and third-tier cities saw new home prices fall 2.8% and 4.2% year-on-year in July, with the declines narrowing by 0.2 percentage point and 0.4 percentage point respectively. On a monthly basis, new home prices in the four first-tier cities dropped 0.2% month-on-month. The second and third-tier cities saw new home prices fall by 0.4% and 0.3% respectively. But if we were to extend the chart to since 2021, home prices in China has fallen between 30 to 40%. So how are they tackling the real estate crisis? In Shanghai, property tax is temporarily waived for the first home and allowed buyers to withdraw provident fund for down payment while raising the individual provident fund loan limits. Eligible residents, including those outside Shanghai, can now buy an unlimited number of homes in the outer suburbs. So right now, you remember that the policy, the government's policy then was homes are for staying, not for speculating. So right now they are allowing speculation back into the market because they want the prices have already been severely depressed. So Shanghai moves follows a similar easing by the capital city Beijing in early August, which also allowed eligible residents to buy an unlimited number of homes outside the fifth ring roads, widely considered suburban areas. So they do not want people to speculate the inner core of the city, but on the external side of the city, the suburban area, they will allow some speculation. So the Chinese government is reportedly considering asking SOEs to purchase completed but unsold apartments from developers to convert them into affordable housing. So China power consumption. Now, I share power consumption because it is a close indicator to what's happening in the economy. Now, China's electricity consumption hit 1.03 trillion kilowatt hour in July, representing a 8.6% increase year-on-year. In July, power consumed by the primary and secondary industry rose 20.2% and 4.7% year-on-year to 17 billion kilowatt hour and 593.6 billion kilowatt hour respectively. Power consumed by the tertiary sector increased 10.7% to 208.1 billion kilowatt hour. The electricity consumption of the country's residents also saw strong growth due to prolonged high temperatures and humidity, with total power use reaching 203.9 billion kilowatt hour, a year-on-year increase of 18%. From January to July, China's total power use climbed 4.5% year-on-year to over 5.86 trillion kilowatt hour. So you can see that China's GDP is for the first half of the year was around 5.3%. So this closely mirrors, okay, that the GDP and power consumption are very closely related. Now, unless if the GDP is 5.3%, but then the power consumption increased by less than 3%, then we will know that there is some discrepancy in the data. So let's talk about a recent policy which the government has unveiled, which is called the AI Master Plan. So there are 14 sections with the government aim to promote. One is AI plus science and technology, and AI plus industrial development, AI plus consumer upgrading, AI plus public well-being, AI plus governance capacity, and AI plus global cooperation. Number 7 is enhancing foundational model capabilities, and 8, enhancing data supply and innovation, 9, enhancing intelligent computing power coordination, 10, optimizing the application of ecosystem, 11, fostering a vibrant open source community, 12, building a strong talent pipeline, 13, reinforcing policy and regulatory safeguards, and 14, improving AI safety and security. Now, obviously, here will give you some insights into certain companies in China that could be potential for investment. So what could happen in September? Consumption of consumer goods could signal weakness, but consumption of services due to government support could lift higher, offsetting the weakness in the former. Overall, will have a net positive impact on retail sales. Inflation could retreat as consumption of goods wanes because goods need to be produced by using materials. Okay, and if let's say consumption of goods stall, then the production of goods will also be reduced, and therefore inflation could retreat. Recent attempts to boost the real estate market may see a slight uptick of positivity, and this will be reflected in the sentiment towards stocks of property developers. In fact, as soon as the news about the easing of speculation saw some developer shares making some headways in gains. And the announcement of China AI Master Plan could boost Chinese AI-related stocks, including chips and chip manufacturing equipment manufacturers. Data centers will perform satisfactorily as well. So, and we can see this, okay, just before we start this talk show, both Evelyn and myself, we were talking about Chinese stock called Capricorn. Okay, a few years ago, it was less than 90 renminbi. And recently it's traded as high as 1,500 renminbi per share before dropping back slightly today after a warning on second half earnings. And we can see that the AI related stocks have actually made some gains, which we share in our members area. Those stocks that have registered some gains recently. And of course, data centers as well. So, of course, there will be more technology breakthrough coming out of China with regard to the adoption of AI in the manufacturing and healthcare sectors. So, in terms of job politics, I think the biggest question right now will be, will the US go to war with Venezuela? So right now, a lot of US warships are actually going to the Venezuela coastline. Okay, so despite the media's suggestion that the US is going to neutralize the drug cartel in the country, the main objective is to secure Venezuela's oil reserves, which is the largest in the world, its lithium and gold resources. Meanwhile, Venezuela has mobilized 4.5 million of its militia in preparation for the confrontation. If war breaks out, the US dollar will tank because that would mean the US will have to ramp up its spending, okay? And that would require more borrowing, so the US dollar would tank. And because it involved Venezuela, which has the world's largest oil reserve, oil price will rise alongside with other commodities due to the weakness of the US dollar, and precious metals will skyrocket because of increase in global tension and uncertainties. So tension in the Middle East remains with conflicts being active in southern Lebanon, Gaza, and West Bank, Syria, and the Red Sea. Recently, the Houthis in Yemen has been trading blows with Israel. Russia has just evacuated its diplomats from Israel. And this suggests that Russia is anticipating a resumption of the Iran-Israel war once the latter has been fully stocked up its ammunition. Meanwhile, Iran has decided to withdraw from the Nuclear Non-Proliferation Treaty, suggesting its intent on developing its nuclear deterrent. So, elsewhere, there will be less tension, but as Evelyn said, it will be very focal on several hotspots. Okay. So in Europe, Russia has intensified its strikes on major cities in Ukraine as Ukraine continues to hit Russia oil depots and refineries. So there's a lot of tit for tat military action. Okay, Trump is trying to negotiate peace, but Russia is not accepting the terms. And therefore, it will be constant tit for tat until some diplomatic urgency is being addressed. and eventually both sides, decided to reach a point of agreement. But based on the current situation, there's a lot of challenges ahead. So yes, threat to tariff India to stop the country from importing Russian oil is backfiring. Looks like India and China will resume talks. So the US just enhanced the BRICS and SCO cooperation between the countries. Meanwhile, China is buying more gold than projected. And this is a report by Deutsche Bank. So Evelyn, back to you.
Okay. Let me just share my screen again. Okay, so okay, so yeah, it seems that it's quite chaotic, and I think between Russia and US, Zelensky has no voice in it. Okay, so yeah, yeah. So let's yeah, I okay. I think now it's nearly end of the year already. However, you can still download a chapter of this book if you're interested to check on our forecast for this year itself. Okay. And you can also get this book for free. We are, you know, um, giving a very good offer for you to join as our member for year 2025. Okay. The comprehensive member now only costs 99 ringgit, which is less than, 100 ringgit. And the premium now is only at 187. Okay. And we also have another package, for you all, where you can get, the comprehensive members together with our um, period 9 course, where we talk about the upcoming energy of period 9 together with some stocks company studies that we have done in depth from the energy of five elements energy, and also PC also has done a lot of research. Actually, most of the stock that he recommended, I think about more than 90%, they are, you can see the profit today if you invest. The cost alone, actually, we are selling at 548. Okay. And then I also put in the secrets timing for investment, because we know that investment is also about timing. So in that course, I have also talked about the timing itself, when you should invest within the years and when you should exit. Okay, the total bonus, and you will get 2024 recording edition as well. That we have done this course for 2 years already. This year 2025 is our second year, and in 2024 um, you will get the access to 2024 edition, because in 2025 we have renewed some of the content, but the 2024 content is still valid. And also you will have a free course on how to pick growth stock that is worth 299 as well. Okay, so the total bonus is 1125 and we are selling at 698. If you are interested, then you can choose to to buy this package, or you can just buy, if you want to just try, you can buy the 99 ringgit members package, okay, for year 2025. Okay, so this is the thing, and I think for the period 9 course we have got a lot of good reviews. This is what the student has says about the course itself, that in fact the course itself will help them to build their own portfolio, your investment portfolio, because most people are lost on what to put in or what to invest and build the investment portfolio. That's why they buy unit trust and all these things. If you really have enough information and knowledge, I'm sure you would want to, it's your own money. Why you let other people control? You should be the one that, controlling your own money, controlling what you want to buy and what you want to this one. Okay. And if you follow us, I think most of our information are spots on. I can tell you that we have already a track record of I think more than 3 years to prove that as well. Okay. We are the first. In fact, I can tell you that we are one of the first platforms that talk about China and China stocks. Okay, 3 years ago, 3 years ago. Okay, before anybody else, before even those famous, investment gurus talk about Chinese stock. I think there are some that is already talking about it. Okay. So everyone is still buying US, but we already talk about China stocks at the time. Okay, so this is what our member says about us, that our about our platform, Global Trends and Astrology. Okay. And yeah, and this is our track record. We talk about precious metal, silver, gold. It has gone up. Some of the I'm holding. This is another one that that rise up sharply. Okay, even in Bitcoin, I even tell the member the timing, when to go in, when to exit, because we can see the energy quite well. So I hope that, um, um, you guys can consider, okay, investing in this platform, okay, and get information that guides you in your investment decision. Okay, because everything is on information. There's so many informations. You do not know what is right, what is wrong. At least we have already filtered from our side, and we can, and we this is what we bring to you monthly. And moreover, the benefits of members is that you will get early access to this talk if you miss it, and there will be a dedicated Telegram channel. And I also give some manifestation, if you believe in manifestation, on investors intuition as well. Okay, so this is a summary for the September month, that that is from my side, is that potentially, there will be sudden cooling, a storm risk, early frost, okay, and strong winds, because this year is actually year of winds. I already talked about why it's a year of wind in some of my earlier talks, the forecaster. Okay, we can see that. Then ideologically, there will be tension, protests, but there will also be strategic retreats. Okay, risk of earthquake again, landslides, especially there is a pillar to pillar clash. Okay, between the month and the day pillar. So there are manufacturing gains. There are also resource tensions. In fact, this year is all about resource tensions. Okay, you should be cautious about spending as well. And then and also um conserve your capital. Okay, so I think over to you, BC, to do the summary.
Yeah, obviously, more tension in Middle East and current trend indicates resumption of Iran-Israel war and potential military conflict between US and Venezuela, geopolitical tensions and countries working actively to secure their mineral security will create tension and push the price of commodities higher. I think in the members Telegram channel, I've put out a list where US deemed are critical minerals, and because of that, they will actually try to uh, wrest control of critical minerals from China in Latin America and also in Africa. So that itself will create some uh, supply chain issues, okay? Because once it is deemed critical, definitely these countries will be hoarding these minerals where in preparation for war or for certain geopolitical crisis, and therefore these minerals are hoarded and is not put to production. Therefore, it will only push up the price of minerals higher. And there'll be slowdown in spending globally due to inflation and tariffs. And we can see that this is reflected in China, which is the second largest economy. And even though the US is showing increase in retail sales, but we know that the CPI data, inflation is being manipulated so that it creates the idea of a much better GDP, because US report is GDP net of inflation. So if let's say inflation is controlled on the low side, then of course the GDP would actually be much better. So but I think if we look at the recent news, okay, a lot of countries, I think 26 countries have already mentioned they will no longer be delivering parcels to the US. And that is why if the consumers bought from Amazon, they have to pay a much higher tariff, because the minimum, before that, there is no de minimis tax on parcels. Right now, that has already ended. They have to pay, tax of between 200 to 800 for parcels. And that's why 26 countries have already announced they will no longer be sending parcels to the US. So that itself would actually cause the retail sales in the US to be affected. Okay, so military spending will be up, but at the cost of the actual economy. We can see that how it has deteriorated the finances of UK, France, and Germany. And more countries would actually be impacted because of spending on military. So that's all I have for the summary.
Okay, yeah. So any questions you can put in the chat here. Okay, we have actually one question, sir. Okay, so we have questions from Audrey that what is the foreseeable outlook for US tech industries in September?
You want to answer that first, or I?
Okay, actually, according to the trend itself, as I said already last month, that US will have an upper hand in these 2 months. Okay, so definitely I think in September probably this is just a forecast only. It might not be accurate. I'm just judging from the energy itself. That September I think it still will do quite good. Go ahead, BC.
Okay. If the Fed really cut interest rate in September, then of course, it will be it will actually give a boost to the market. Okay. So and I believe that the US will be looking at reason to cut rate. Therefore, the coming employment report next week, the NFP payroll report, will also reflect the urgent need to cut rates, because right now the BLS would be under a person who is supportive of Trump policy. So I think it is going to be managed in such a way that the Fed will also agree that it is imperative to cut rates. Now, if let's say that happens, then of course the US stock market would do well. But as I mentioned, if you look at how the money is being printed, M2 money supply, it actually, the S&P actually rises in tandem with the M2 supply. But as I've shown to many people all through the few years, under the long-term trend, gold has actually, especially since year 2000, gold has actually outperformed the S&P. The S&P, I think, has increased about 400% or less, but gold has increased by more than 1,000% since year 2000. So even though the stock market may go up in dollar value, but at the same time, when it's value in gold, it might be down. Okay, so that is why sometimes you need to, if you invest in the stock market, you also need to make sure you hedge yourself against the continuation of devaluation in fiat currencies. Okay, so that is why gold is the best hedge, and silver is good for speculative hedge. So hope
Yeah,
that's
like the
answer your
situation
question.
in Venezuela.
Yeah.
Yeah, that's right. Okay. So yeah, yeah. If you can, if those that are curious to know, we have already actually forecasted that in August that US will have an upper hand, um, these few months. Okay. So yeah, um, okay, Steven says that historically September is a bearish month with major pullback. However, there's expected rate cut. I think this is what um, BC has talked about. So, is there a possibility that September will be a bullish, will be bearish on will be bearish or US markets will trend up? I think we have already sort of, answered these questions as well. Um, yeah, to predict whether stock market is up and down, is a bit like gambling. It's only 50-50 chance because we only I can tell you roughly the trends based on the energy that we are looking at for the time being because I think US has quite a rough time earlier this year, but um, towards this third quarter, they will perform better. Okay, so yeah, generally, I think there is a lot of statistics talking about looking at the crashes and all this is always around September October month. Yeah, but sometimes things can be different. That's why some of these things are not predictable. So based on forecast of technology sector, which market will have a higher upside, US or China? Um, this one I'm unable to answer, but BC, maybe you can answer that.
Okay. I think back to the question of traditionally or historically, I think we have already reached a situation whereby history does not matter anymore. Okay, because historically, high inflation supposed to push a stock market down, but right now high inflation, okay, is pushing the stock market up, and we have reached a stage where bad news is good news, just like what they say, when in May, go away. But then, the S&P just keep on rising ever since it reached a bottom in April, okay? And since April, due to the tariffs, since April, the S&P has gone up by 30%. So right now, we have reached a mania, okay, where historically, of things doesn't follow what is the historic trend, because right now the S&P, whether you follow the Buffett indicator or the market cap to GDP, everything is way up. Okay, but like I say in my recent talk with with Macquarie and Malacca Securities, everything is on fire. But since there's a fire, we might as well,
Fire ma.
yeah, we might as well enjoy some barbecue. Okay. So do not let this kind of thing hinder what is historical, because I can tell you everything is no longer fundamentally being followed or historically being matched in terms of this speculative mania. So the moment they have rate cut, rest assured, I think December will have another rate cut, and therefore the stock market will go up. And for those who watched the video which I sent in the Telegram channel regarding a podcast involving where David Hunter is the guest, he actually forecast that the S&P could reach 8,000 because of all this mania, easy money. And we have not even talked about towards year end, the stable coins project would be implemented. Okay, whereby stable coins are printing money out of thin air, buying US Treasury, and allow companies to issue their own stable coins to put into the business, and therefore that will also push up the speculative mania. So that is how the stock market will likely to behave. Now, in terms of technology, some technology stocks in US will be under pressure and some will not. So one of the best thing to evaluate a tech company is to use the PEG ratio. So if let's say the PEG ratio is the PE ratio divided by the earnings growth. So if let's say the PEG ratio is less than 1, that means that the stock is undervalued. Some people put the criteria as less than 1.5. Okay, but anyway, it's anywhere between 1 to 1.5. You can actually use it as a gauge. And if let's say it's less than that, for example, because it's 1.5 to 1 to 1.5, you might well say, okay, I set my standard that the PEG ratio should not be more than 1.25. If let's say the PEG ratio you calculated is less than 1.25, that means that there's some leeway for the stock to gain in terms of price. But if you ask me personally, I am more invested in Chinese tech stocks than in US tech stocks. Okay. I think China has a very, like the master plan itself has already revealed that China has a very step-by-step policy of where it wants to go. Whereas the US, they come up with certain policy, okay, because they want to achieve something within the shortest time. So that itself sometimes may not be the best solution. But because a lot of the policy that is being put into place, then I think that China tech could do well. Most of the Chinese tech companies should do much better than the overall US tech companies. But the US tech companies do have a few that is right now undervalued. Okay, so you have to do, come up with those popular names and do your own calculation. Okay.
Yeah, that's right. Okay, so it will actually depends very much on what we can advise is that if you're really making profit, I think it's best that you cash out. Nobody can predict when the bubble will burst. Okay, so about Bitcoin, Ethereum. What do you want to know about Bitcoin, Ethereum? Because actually, we talk about that actually more in members area. I will reserve that. Maybe I do not know that exactly what you want to talk about in Bitcoin and Ethereum. So you let me know. Okay. So